Good evening to everybody. I'm on Instagram over here. So when y'all see me looking over here, okay. I'm on TikTok over here. Here, I'm on Facebook and YouTube. Okay. So, and I got my notes in front of me. So y'all just bear with me. Let me know if y'all can hear me. Hi, good evening. Let me know if y'all can hear me. This screen, my TikTok screen, I can't really. The background. Okay, just tell me if y'all can hear me. Hopefully, y'all can hear me. Let me know if y'all can hear me. Yes, we can hear you. Okay. Okay, I just like making sure. And TikTok, can y'all hear me? I hope y'all can hear me. Instagram, can y'all hear me? Okay. Thank y'all so much. Okay, we are going to be talking tonight. I'm going to be teaching y'all about auto and business tax deductions. Okay, thank you so much. Okay, I'm going to be teaching about auto and business tax deductions. Okay, um, the last time when I was doing business tax deductions, I said I was going to save this part for separately because it's a lot involved. Okay. So, all right. Let me just get my notes here. First, I want to tell you about the home office deductions. Okay. And hopefully, all of you know who I am, right? Coach Ktasha. Okay. A lot of you follow me on Instagram, YouTube, Facebook, TikTok. Okay. So, now let me just go into a little bit about why we want to claim our home deductions and our auto deductions. Like, honestly, those are kind of like the two biggest expenses that we have when it comes to deductions. Okay. Right. So, understanding it is just very crucial. Okay. It really helps us to maximize our profitability. Okay. And with the changing tax laws, we really want to make sure we always know what we can and cannot do. Okay. Now, first, I want to say when it comes to home, even home or auto, but right now I'm only going to be dealing with home expenses. Okay. It must be exclusive and regular use. Okay. The whole thing is that when people hear the term home office, they're thinking that it has to actually be an office. Okay. It doesn't have to be an office per se. It can just be any exclusive area that you use for business. Okay, let me give you an example. Let's say you have a photographer. Okay, you have a photographer who goes around to different locations, doing photo shoots and everything. But at home, the photographer is doing editing, doing administrative work, responding to emails and everything. That essentially is his or her principal place of business. Okay, and as long as they have a certain area in their home that's being exclusively used for that, it's totally fine. Okay. Now you also have like consultants like myself where I conduct a lot of Zoom meetings and so forth. So obviously my home is my principal place of business. Okay. So these things are important. Okay, you got to know the difference. Now, let's talk about how we calculate these methods. IRS lets us use two different kinds of methods, okay? They have what's called the simplified method, and then they also have what's called the regular method. Okay. Now, for a simplified method, what they've done, they've made it easier for instead of people having to worry about doing calculations, they just say, hey, take the amount that you use for the amount of square feet you use for business up to 300 square feet. Okay. So they let you do $5 per square feet. Okay, square foot up to the 300. So that's like a flat $1,500 deduction. But now you have some of us who maybe have more square feet that we're using besides 300, or more expenses or whatever. So we may want to use the regular method. Now, the regular method, okay, you basically take your entire a number of rooms or the total number of square feet, and then you calculate the square feet that you're using strictly for business or if it's just a room, and then you get that percentage. And then the percentage is what you're going to use to write off your expenses. Okay, and I'm going to tell you what some of those are. All right, when it comes to our home expenses. Now, we have, now if you are a renter, okay, you can write off a percentage of your rent. If you own a home, then you can do the mortgage interest, okay, a percentage. Now we also have insurance, right? We have renters insurance, homeowners insurance. If you own your home, you have real estate taxes. At home, we're also doing utilities, we're paying for internet, Wi-Fi, okay? Also, we're having repairs, maintenance, housekeeping. I actually use a housekeeper. Hopefully you all do, because it gives us more time for our business. Okay. So, you get to deduct a percentage of that. Okay. I'm sorry, guys. I'm just noticing. I apologize. Okay. So, in any event, you get to deduct all of that. And let me tell you a little trick to being able to write these off. Now, normally I'm going to take you on the personal side for a minute, right? On the personal side, IRS lets us take a standard deduction, and we can also take we can either itemize or we take the standard. But most of us nowadays do standard because of the way the laws work now. Most of us don't really qualify to itemize anymore. And when we were itemizing, part of our homeowner situation was included in that, okay, like the mortgage interest and the property taxes. But now what happens is, if you no longer itemize, you're not writing those things off. But guess what? As a business owner, okay, you get to include that on that business side. Okay, so see how that works? You lose it on the personal side, but you get to recapture it on the business side because of the home office expense. And again, we're just using home office as the terminology, but it's not that you have to have an actual office, as I mentioned. Okay, so that's a little loophole. All right, if you can no longer itemize. Okay, so I wanted to make sure I told you all about that. Now, there's a difference between direct expenses and indirect expenses. Okay, let me give you an example. Direct expenses, okay, direct expenses are, sorry, it was some nonsense going on my TikTok. Okay, direct expenses are money that we spend specifically for the home office. Okay, let's say, for instance, you do have an office and maybe you paint it or you do other things in there or whatever. That's considered a direct expense. So you'd be deducting that whole thing. But then you have indirect expenses, okay, which is money that you spend for your entire home. So you're only partially deducting, okay? That's indirect. All right, those expenses. Now, let me give you a few extra tips when it comes to your home office deductions, okay? They cannot exceed your gross income from your business minus other business expenses. Okay, and this is actually all captured on your Schedule C form. All right, that whole calculation there. So you'll see that there's a cap that you can write off, and it's going to not be able to exceed the rest of that. Okay. Also, if you do own your home, you can actually also claim depreciation for the portion of your home that you use for a business. Okay, so that's a good thing to do because it helps to, the goal is to always reduce our tax liability. Okay, and the main thing you want to do is be keeping good records. All right. Now, let me go to okay. So that's pretty much it for for home. okay, for home expenses. Now I'm going to go to auto expenses. Okay, I'm going to go to auto expenses. And auto expenses, all right, you first need to make sure that your vehicle qualifies to write off auto expenses, okay? And you're pretty much deciding, like, is it basically business versus personal mileage that you're doing, or usage, okay? Or is it for business use only, or is it like mixed use? Okay, that's what's going to help you determine eligibility. Now let me give you an example of business versus personal. Well, we know business versus personal, right? But okay, so obviously if you're driving for personal use, you're not going to do that. But if it's for business, then obviously that's what you can claim. I'm going to give you a couple of tools, okay, a couple of tools that you can use to help you. Like, it's like I call it a flip of a switch, because you keep it handy on your phone, these apps and tools. And then when you're driving for business, you activate it. When it's not business, you switch it off. So you can use tools like Mile IQ. There's another one called Everlance. Okay. There's another one called Sherpa Share. All right. You also have TripLog and Hurdler. All right. So these are good apps to use because it helps you not have to be keeping track of what's business mileage versus what's personal mileage. Okay. You always want to be tracking that mileage. Okay. Now let's talk a little bit about strictly for business use, because you do have some situations where you're not even using that particular vehicle for business, for personal use at all, right? For example, if you have a food truck, okay, if you have a delivery business, maybe you have a delivery business, so you never use that vehicle for anything but the business. Also, mobile pet grooming. A lot of people are doing that now, mobile pet grooming. Okay, there's even some mobile situations where they have these vans set up for like barbering, hairstyling, okay, and it's strictly for that. All right. Sometimes you have caterers who strictly use their vehicle for only for business, also like cleaning services. So when we're talking about vehicles that are exclusively for business use, then all of the expenses in that case, you don't have to worry about what's personal. Okay. And so if, for example, you drive your vehicle for both purposes, right, personal and vehicle, and let's say maybe by the time you total up all your mileage for the year, whatever, let's say if it was about 60% of the mileage that you drove was business, then you would be doing 60% of what you can deduct, okay, on your vehicle. Okay. And sorry. Okay, so you'd be doing 60% of what you can deduct for the vehicle. Okay. Now, I'm going to give you a list of what you can deduct. Sorry. Okay. When we're talking about auto deductions, okay? Now, if you're doing I'm sorry guys, just trying to get to my notes. Okay. So if you're doing actual expenses, because you can do mileage or actual, okay? And so when we're talking about mileage or actual, okay, standard mileage, what happens is every year the IRS gives you a standard mileage rate that you can deduct. Okay. For example, in 2023, I think it was something like, I'm trying to get to my notes. I think it was something like 65.5 cents. It was 65.5 cents per mile for 2023 this year. Okay. IRS changes it every year. Every year they give a new standard mileage rate. So if you're just doing standard mileage, then that's how much your business miles times the standard mileage that they allow. That's what you can write off. Okay. Now, when it comes to actual expenses, some people prefer that because maybe their actual expenses kind of wind up being more than if they did the standard mileage. Okay, so some people would prefer to do the actual, because when you do actual, okay, well, let me back up for a minute. Sorry. Okay, jumping back to mileage, okay, when you're doing the mileage write off, you can still write off a few more things like your vehicle loan interest if you're financing, okay. You can also write off tolls and parking. You can write off towing, okay. You can also write off your AAA membership, all right. And also, like if you have garage rent, all right, that even if you're doing mileage, standard mileage, you can include those things as well. All right. Now, I would say that standard is really best for, like, if you have an efficient car and you don't spend a lot on repairs and maintenance, you might want to go with standard. Okay. And also, maybe if you're not too good at like keeping great, the best records or whatever, you might just want to simplify it and go with standard. Okay. But like I said before, if you were here in my previous lives, I'm always promoting that there's no one size fits all. Okay. There's no one size fits all. Okay, yes, yes, you can. You can DM me to set up a consultation. Absolutely. Okay, now I'm going to jump back into actual expenses. Okay, actual expenses. Now I'm going to tell you, a lot of people who lease vehicles, they kind of prefer to do actual, because in the actual method, you can write off majority of your lease payments. Okay, so a lot of people prefer that way. And when you're doing actual, okay, you can also write off insurance, gas, maintenance and repairs. Okay, you can write off your title, registration, vehicle depreciation. So, again, you have to figure out what's best for you. Which method should you use? Okay. If your car is like expensive to maintain, you probably would want to do actual method instead of standard. Okay. And if you drive a lot for your business, okay, then you might would prefer to use mileage. Like if you put excessive miles and maybe you don't have that much actual. Okay. So always choose the method that works best for you. And what I will say is that once you go with the actual expenses, it's kind of, you can't really like flip flop when you're doing, I want to say it's for the life of the vehicle. That's the best way I can describe it, for the life of that vehicle. Now, obviously, if you change vehicles and you previously were using one method on this vehicle and now the next year you got a different vehicle, so now you want to change the method, that's fine. Okay, but usually the IRS gives you a hard time if you 1 year you in this one vehicle, like you got this vehicle for 4 years and you're going back and forth. That's like that really doesn't fly too well with them. Okay, they kind of, yeah, they'll probably give you a hard time about that. All right. Now, what I do want to tell you is some misconceptions about some of the things that I talked about tonight. First, I want to mention a misconception about the home office, that all work from home, qualifies for home office deduction. And as I mentioned, no, the area you use has to be exclusive for business. Okay. And like I mention earlier? If I didn't, I'm going to re-mention now. It doesn't have to actually be an office. It can even be an exclusive area that you use in a larger room. Okay. And you just use that particular area strictly for business, and that's totally fine. Okay. Another misconception that I want to debunk is that the home office is a red flag for an audit. That's not the case. Okay. If you're entitled, we are entitled to what we are entitled to. And as long as you're keeping proper documentation, you don't have to worry about an audit. Like, that's what I'm always telling everybody. Run your business like you might be audited one day and you won't have to worry. Okay. So if you are audited, audit is really no big deal. They just want to verify that what you were claiming and what you were reporting is what it was. Okay. And another misconception, a lot of times you'll hear homeowners say, "Oh, well, I don't want to claim that because if I depreciated my home, for the home office part, when you go to sell, there's something called recapture, okay, recapture tax law. And a lot of people feel that they take a loss or a hit if they do it that way. And that's like a whole misconception. The only part that gets recaptured when you're selling is the portion of your home that you were using for business, not the entire home. Okay, so that's definitely a misconception. Okay, and in terms of a misconception for auto, I want to mention. I think I said it earlier, but like it's basically just goes down to the what if like how much of a percentage you're using it for business versus personal. Okay, that's just the key thing right there. And if you're using those tools and apps, you really don't have too much to worry about. Okay, so I'm going to give you a quick example. Let's take Michelle, right? Michelle is a caterer. I just came up with a name. Michelle is a caterer and she uses her personal SUV for delivering her orders. Okay. So now, okay, one second. I'm going to circle back to that. Okay. So now she uses her personal SUV for deliveries. And in the whole year, she drove about 20,000 miles. Okay. Now, 12,000 of those miles were for business, but 8,000 were personal. Okay. So as I was explaining earlier, right, we all know now that she can only that 12,000 miles that she drove is what's for business. So if she's going to go with the mileage deduction, then she for 2023 the calculation would be 65.5 cents times her 12,000 miles, and that's her deduction. Okay. If she's going with actual, okay, then she can only, it's still the 12,000 miles that it applies, but you do a percentage. So I did the percentage, it was like 60%. So that means she'd only be taking 60% of her actual expenses, okay, for her deduction. All right, 60% because that's what 12,000 out of those 20,000 miles is. All right, so that's how you do that. Okay, now I'm going to give you all a chance. I know I think I went kind of fast, but I try not to keep y'all too long. Okay, I don't like to draw things out. Make sure you come back next week. I'll be doing another live on Wednesday at 7. Yeah, definitely come back next week. Now let me see, can I have a home office and an off-site location for office space? It's kind of iffy. I would say it depends on the industry because, like, if you have an office space, that becomes your exclusive use for the business. So that may be, if IRS was to question you, that may be kind of hard to prove. What did you need the home office for? But then again, it depends on the industry, you know. Yeah, that's kind of like it's kind of like, yeah, if you already have an office space, then it's probably going to be kind of challenging to kind of still write off some stuff at the home. Okay, so I wanted to give you all a chance to ask some questions. I don't know why I can't like my TikTok over here. If y'all have any questions on TikTok, let me know. Okay, so I can answer your question. And anybody on YouTube or Facebook, if anybody has any questions. Oh, yes. And make sure y'all go visit. Take this down. If any of you are looking to work with me for the upcoming season, go to mytaxpartner2024.com. Okay, that's mytaxpartner2024.com. And all the information is there that you will need. I have frequently asked questions. I have a link for you to fill out what I need to know to see if we're a great fit. It's kind of like a pre-questionnaire that you fill out. All right. And make sure you come back next week when I will be going over my next topic. Let me tell you what that topic is, if I can find it really quick. Okay, let's see. I'll tell you what I'm going to be going over next week. Oh, wow. Let's see. Let's see. Give me a quick second, guys. I'm going to tell you what I'll be talking about next week. Okay, so next week I'm going to be going over, yeah, you definitely want to come back next week. I'm going to be going over year-end tax strategies. Okay, I'm going to be talking about some retirement stuff, some tax advantage accounts, and giving you other tips for year-end. Okay, and that's like the perfect time because it still gives you a window to do some things before December 31st. So next Wednesday, 7 p.m. Eastern Time, I will be going over year-end tax strategies. Okay, so I do thank you all for joining. Does anybody else have any more questions? Any more questions before I sign off? Thank you all for coming. I hope you all had a great Thanksgiving. All right. Don't forget to come back next week. Check out my link if you want to work with me. Okay. And I will see you all soon. All right. Take care. Oh, there is a question. There's a question. Okay, hold on now. Okay, what's the question? Let me see. Oh, can I claim is the live next week only for business owners? Yeah, pretty much year-end tax strategies for business owners. Okay, can I claim, hey Sherry, can I claim a rental and hotel expense for investment? Can I claim a rental and hotel expense for it? I may be misunderstanding your question. I apologize. Um, are you saying, can you claim hotel expenses? I'm kind of confused. I do apologize, but you may want to inbox me so that I can get further clarification of your question. Okay. Yeah. All right. So thank you all for coming. Anybody else on here? Okay. Anybody else on here that has questions before I end the live? Thank you again for attending. Okay, then. So you all have a good evening. Take care.